Okay, welcome back to the mobile mailbox money mastermind here today, September 18th. We teach investors to make money in up and down markets. Someone muted me there. Thanks so much. So via private lending, now more important than ever for an income-oriented investment strategy. Why? Because there's pressure in residential real estate. We saw the Fed reduce rates like 0.25 points the other day. Doesn't super move the needle. And I think a lot of people are on the sideline and wondering how they can facilitate living the life that they want to live via their investment strategy, getting income and have predictable rates of return. That's what we call mobile mailbox money. So today is brought to you by Silvercrest Opportunity Fund. That's a 506c note investment fund providing an accredited investor a 1 year term at 10% net paid monthly, a 3 year term at 12% net paid quarterly, or a 4 year term, 5 year term at 14% net paid monthly. So that's providing our investors a income-oriented investment strategy and availability to go live their life and not have to worry about non-stable income coming in. We're here today actually at Paper Trail Note Conference here in Phoenix, Arizona, and we've been to probably 10 different national note investment conferences. We're out here shooting content, got the hologram behind us here. There's probably, good 50 to 75 people here. So we're looking to raise some capital today. And just a quick house cleaning from the past week. We attended Arizona Real Estate Investors Association and picked up a new lender. You may have to mute your phone.
Okay.
I picked up a new lender actually from our booth at Arizona Real Estate Investors Association. Sorry about the small technical difficulties there, but a big deal, guys. We just picked up, I think, a soft commitment of $1.6 million from an accredited investor who's gonna, I believe, fund on Friday. So that'll be our largest investor that has entered into the fund with one lump sum. We've recently acquired about 8 notes on manufactured housing, our primary business model, first lien, double-digit interest rates within our fund. So made some acquisitions. We've got about 7 homes in escrow right now in our primary model in manufactured housing. And with Jason and Todd, now we get extra deal flow of high return on investment, lien positions in seconds with 65% loan to value or less with the new debt, providing us, our group, an 18% return, and we look for less than what we lend at. So providing our passive partners a position with high equity cushion or in first position with a double underwritten asset. So passive diversification capability here today at Paper Trail Real Estate Note Conference at the Crown Plaza here in Chandler. So today we've got a few deals that we wanted to run through, live deals, and time is of the essence. Why do I say that? Because these deals could be gone in the next 2 days. They get absorbed into other finance components, into other individuals. They don't just go to the wayside. Why? Because these are banger deals. I don't think people are understanding the once in a lifetime opportunity that we have here in affordable housing and some quote unquote bailout loan programs at 65% loan to value. Man, we're really opening the treasure chest here today, providing you a back office view of how we operate, as well as providing you real deal flow for capital investment. So I just want to share my screen quickly. I'm going to share one note that I'm quite proud of. So we'll get here real quick. Go to winmobilehomes.com, who's the largest dealer of manufactured housing in Arizona. We'll share lot number 20 today. Lot 20 is currently in escrow at 119.5 with a $7,000 down payment, $2,000 in closing fees. That UPB, let's just grab out a Carl's mortgage calculator real quick on this nice double wide in a desirable market. Only got one photo here. But long story short, it's up the major cross streets of Ellsworth and Broadway. If you don't have a mortgage calculator, do yourself a service. Go download a free Carl's mortgage calculator because that provides you the availability to see what your return is. as an investor. So at 119.5 with 7,000 down on a 20-year term with a double underwritten borrower, this is 1398.96, $1,398.96. Backed by this performing home, this newly originated note, that buyer went through formal qualifications to receive the financing. So, in other words, your unpaid balance of 112,500, 112,500 would be your acquisition cost for a first lien only lien on this property at a 20-year term for 1,300 a month. That's 13,000 bucks a year more or more. It's actually more uh, that you can start literally cash flowing in a 30-day program on a quality 2012 manufactured home in the Mesa market with a double underwritten borrower, Ellsworth and Broadway. And this home happens to be in a low lot rent community. So super affordable for the end user. Not only that, but they get a turnkey product and we get a double digit interest rate outside the stock market with a performing collateral. Literally toughest thing to find right now, and possibly the highest yield on investment that you can find out in the market of a 30-day cash flow. We have now come across some second lien opportunities that are risk mitigated up front and provide our investors the availability to quote unquote get vested with one of the largest qualified operators in creative finance in the nation here today. So, Jason, let's kind of chef up some deals here. What do we got on the table? And again, time is of the essence. We record these weekly, so you can go back and see the deals that were last week that are done. They're gone. So, don't hesitate to reach out if you see something that you like here right now. Call today at 602-888-CASH with additional clarity needed. Jason, let's check it out.
Absolutely. So let's go through some deals that are we're in the middle of working right now. We haven't even created the note yet, but these are typical of what we're seeing. This property right here in Winter Garden, the guy's got a first mortgage balance of 273. We're going to write a second mortgage or second lien position, $70,000 note, which is going to put it at roughly a little over 300 grand. You can see the value right there is at 628. So let's say it's worth 600. The loan's going to be just over that. So we're 55% loan to value and below. That's very typical of what we've got. This guy makes roughly just shy of $9,000 a month. He was out of work for a second. He got hurt. He's back to work. And his income is back, so he's making about 90 grand a year. His goal is obviously to keep the house, but the loan to value is about 52% of valuation after the equity loan that we offer. So this is very typical. This is going to be coming probably early next week. And typically we fund these things in about 24 hours, so your group is getting kind of first look at the deals that have not even been created yet. So that's one that's coming.
So just real quick, at $70,000 in acquisition cost via hypothecation, where we pledge that lien in order to garnish capital investment for 70,000 at a 1-year term interest only payment is 583 a month. Let's say they wanted to ride the full 3-year term, may be able to make them a pretty good offer on 70,000. Let me just calculate this real quick. Bear with me here. On a 3-year term is 816 a month. So you get your collateral and a 3-year lockup. You can do that non-accredited via hypothecation where we pledge that note or we absorb it into the fund. So for 70,000 at 3 years, one note with one investor at 816 a month. So those are some quick payments.
Awesome. Here's another one. This is in North Carolina. I know last week, most of the stuff we were talking about is in Florida. We get a lot, Florida, Georgia, North Carolina, and Texas. And now again, we started to get deals in Arizona as well, your guys' backyard. So on this specific situation, you can see the valuation right there is 416. They've got a first mortgage with a balance of 140. Their first mortgage has a 5% interest rate. They're paying $1,060 on the first. They need about 25, 30 grand in a second lien position that will bring them current. And so you're talking about what are those numbers? You're talking about being in at about 160, roughly 160 on a house that's worth 423. So what's that loan to value? Another great loan to value with a great interest rate for our funding partners. And again, this loan should be coming up in the next few days, early next week. And like I said, right now they're working on the paperwork. The note's not even created, but when we know we're good after title work is pulled and we've done all the due diligence and we know it's a good deal, whoever's on the waiting list will get it. It's kind of first come, first serve because we need to fund these immediately. A lot of times these auctions are, next Tuesday, for example. So we don't want to wait till Monday to fund it. So that's why typically it's max maybe 48 hours, but mostly it's 24 hours.
So at 30,000 for a 1 year term, 250 bucks a month, the stability in this position, it's important to understand we're not just a lender. We didn't come into this situation to lend these individuals money. We were actually trying to buy the house to fix and flip the property, and we backdoored the relationship by lending them money based on their equity in their property. I bring that up because let's say hypothetically worst were to come to worst and that note were to go non-performing. If we do enough of these, some are going to go non-performing. That's just the nature of doing enough business. That being said, we have a strategy in place in order to mitigate or make additional profit actually on these deals if it goes non-performing. Well, what is that? That means we pay off the lender, the second lender, pay them off, okay, get you out of the program, and we'll fix and flip the property, take over the first, use a hard money loan of our 20 years in real estate investment relationships, and ultimately make another 30% possibly on our flip. So for the passive lender watching here today, if and when it goes non-performing, we already have intimate conversation with the homeowner and are letting them know upfront about what to expect. So great to kind of point out.
Yeah, and this one here, Alden, is a great example. We really are trying to help people. You know what I mean? That we are real estate investors, but the goal is to give them every opportunity to try and keep as much equity as they can. And this is a great example. This property here, you can see the valuation is 300. This lady owes $60,000 and she's behind on her payments about $15,000. The house has basically been remodeled, but it needs a new roof. So what we did with her is, we're going to come in with a second lien position. We're gonna lend her the money to get current. She's struggling because she just been through the proverbial HE double toothpick, and she's just trying to get her bearings, right? And so we're the only company that came in and said, "Listen, let us help you." Everybody else is saying, "Hey, let me just buy your house and I'll turn around and I'll rent it back to you." And that's not what we're doing. Our conversation with her is, "Listen, we can buy you a year or two, right? To figure out what you're going to do. And if you get another job and your income gets better, then you just refinance us out, right? Then you keep all your equity. If you can't do that, we got to sell it." Right. So we're going to lend her enough money to fix the roof so the house is in retail condition. If she cannot afford the payments, she's going to call us on the phone. She's not going to call the funding person. She's going to call us on the phone and say, "What do we do?" And we are going to help her get that property listed and help her get it sold so that she retains as much equity as she can. She is a cancer survivor and needs the money, right? So we are actually walking into this situation. We're going to make money. Obviously, we're in the business to make money, but we're actually helping people solve a problem. So in this specific note, she's going to have a note of around, call it 90,000. She's going to be at less than 33% loan to value, and already committed to selling the house if she cannot make the payments. So is there any better protection for our funding folks than a willing seller who will not allow this to go through the foreclosure process?
Jason, what's the viability of contractors that we have in our network in these markets?
Every market that we are marketing in, we've got a contractor network. So we will, if we are lending someone money to rehab the house, we're going to make sure we're involved in that rehab. We're not going to send them the money and let them just spend it on whatever they want. So the goal is, hey, we're going to help you help yourself kind of thing, but we're going to help you and make sure that you perform. So whenever we're lending money in a situation where the house needs work, and we see it a lot every single day, we're having conversations with folks like, listen, man, if you're struggling with your income, you probably need to borrow more than you want to make sure the house is in retail condition so that we can retail it, right? If it isn't in retail condition, then you're talking about an investor coming along and buying it, and you're not going to have any equity at that point. So we're having real, honest conversations with folks, and for the most part, I've never heard anybody else say anybody else is doing what we do. Everybody else is calling them, bombarding them, saying, "I want to buy your house," and we aren't doing that. We are buying houses. Don't get me wrong. That's the business we're in, but we are doing the best we can to solve their problem. Um, and these are the type of leads we get. We probably get 25 of these a week in many states.
What was this position? Quanto.
What was the what?
How much was this second here?
The second is going to be about 30 grand, which includes the roof. So the total loan would be 90, first and second combined on a house that's worth 300. So you're at a 30% LTV roughly.
So at a 3-year term, 30K is 350 bucks a month. Passive, with the largest qualified operators you could find on the internet. But that was 30, 30, and 60 or 70, 30, 30, and 70, $130,000 in positions
Nope.
immediately available.
90, 90. Oh yeah, with all the loans, you're right.
Yeah, so, people are sitting on the sidelines, man, in money market accounts because they're scared of the market, going to low yield bonds. This is it, people. It's right in front of you right now.
Yeah, and we literally we could spend hours going through these. And we get these from our network. I mean, we've spent uh, 25 years building our network. We started at sellmyhouse.com. Todd and I built sellmyhouse.com back we started it 3 months before 9/11 actually. But we built that up and sold that in 2011. And in 2014, when our non-compete was over, we converted it to the wealth investors. So we've got folks in almost every single state. We've got folks we can count on, but that's where our lead volume comes from, from cultivating that network for 25 years.
Love it.
You want to do another one?
Yeah, let's do one more here.
All right.
We
So
don't want to overwhelm them today.
all right, this one's in North Carolina. You can see the Zestimate is 365. Let me see here. The balance on this guy's mortgage is 214. He is behind 12,000. So this will be a little bit smaller position. Let me see here. So we're waiting on his reinstatement letter, but he'll be all in for about 230 on a 375 valuation. He's another guy that got into some trouble because he lost a job. So he was out of work for a while. He got behind. Now he's working again. He is also making 9,000 a month. So his income is back to where it needed to be. He's got equity in the property. They've been in it for 15, 20 years. He just needs a break. And so another very, very good example of us kind of coming in and helping somebody keep their house. But for us, we're basically taking a position in the property. So we're first one in the door if something goes wrong. Think about that in terms of the investment side of what we do. We are building a network of houses that we have second positions on. When they run into trouble, they're going to reach out directly to us, and we're going to try and work it out with them. So, from our end of this, we love to do this because it's part of what you do anyway as an investor, but we're actually helping people solve some problems.
I think it's important to identify that these people are borrowing based on the equity in their property. uh, different due diligence, right? From, say, our traditional seller finance notes of owner occupied, where they're getting fully qualified for a first position loan, based on their credit criteria, debt to income ratios, and things of that nature, where this strategy is purely based on equity. And if we can always keep the benchmarks of under 65% loan to value, we're going to make money regardless. In a up market, in a down market, let's say hypothetically these properties were to lose, 10, 15% of value, we're still good. We paid off the investor, that individual, went on to other opportunities, and possibly even got chef additional from our group here. I'd love to go into some additional firsts that we have. We're here. I've got, like, I think the past 5 people that just walked up trying to tap me here at Paper Trail Note Conference. But to just touch lightly on the scalability of a program like this in private lending, getting 20 of these deals, 5 a week, that hit those benchmarks, that's a $50 million conversation. And that provides us, true stability outside the stock market, true stability and high equity cushion, providing security for our group here, as well as the passive lender. We could, for the individuals that got W-2, the doctor, the lawyer, the person that owns a roofing company, the GC, the property manager that owns, 3 businesses. They don't have time to find deals like this or build 25-year relationships in order to facilitate their want for deployment of capital. To try and replicate a model like this on a busy schedule, is literally non-existent, not available at the end of the day. So I see, a couple of us on here. We've got some new VAs, as well as Roy Perry. Appreciate you joining today. Again, we're here today at Paper Trail Note Conference, making connections, raising capital, and doing deals. We're going to keep this mastermind, I think, a little bit short, but I'm going to open it up for any questions today. So we got the crickets in the chat. That's okay today. We'll be sending these out. We're looking immediately for lenders at $30,000 to $50,000. We've got committed yesterday, just on the side, from a high net worth individual, a $30,000 position and a $50,000 position. He's kind of telling me he wanted to choose between the two. I'm trying to get him to take both. He's definitely got the money, and the proof is in the pudding. At the end of the day, I can't believe people aren't just flying off the walls to try and take down these these positions. At the end of the day, you can't find this stuff online. You can find it here at Mobile Mailbox Money every week on Thursday at 12 o'clock Arizona time. We record this, so I encourage you to go back, view the previous vlogs, the masterminds, the podcast, the interviews with industry magnates, interviews at Paper Paper Trail coming soon, Diversified Mortgage Expo, the Note Expo, Arizona Real Estate Investors Association, where we just got a soft commitment of $1.6 million of a current limited partner who's already funded 400,000. What does that mean? It means we got $2 million coming in, I think, on potentially Friday. 30 and 50, that's 80,000. Real deal transactions going on here on these meetings. They've all actually been a part of these Zooms. So the proof is in the pudding. So we're here at 12:28. We normally do this about an hour, but we're here today at a conference, and I think I got tapped like 3, 4 times. People trying to come up and talk to us. So we're gonna close it out here. I appreciate you guys all viewing. Go back and view the other items, and if you want, call us immediately at 602-888-2274. We're one step closer to financial freedom. That's what we call mobile mailbox money. Appreciate everyone being here today. We'll see you next week. Bam.